If you're watching this, you know AI is the future. But let's be honest, 90% of investors lose money chasing hype. Why? They don't see the real battle happening behind the scenes. And nobody's talking about it. It's not Nvidia, not Microsoft, but this is a $1 trillion time bomb hidden in China. But if you own these 5 stocks, you'll sleep easy and get rich. That $1 trillion time bomb I mentioned, it's not hype. It's DeepSeek, a Chinese AI quant firm training algorithms to trade stocks 100 times faster than humans. And by 2025, their tech could accidentally trigger a market meltdown. But here's the good news. If you own the right AI stocks, you won't just survive the chaos, you'll get filthy rich. I've spent 6 months researching this, and today I'm giving you and Eric the playbook. The 2025 AI boom isn't about flashy startups. But first, let's talk about DeepSeek. Why is this company so dangerous? Because their AI doesn't just trade stocks, it manipulates markets. And if their code glitches in 2025, we're discussing a domino effect that could wipe out your portfolio in minutes. Unless you own these 5 stocks. All right, let's break down these 5 stocks. Our first stock pick is Advanced Micro Devices, or AMD. AMD isn't just another chip manufacturer. It's a powerhouse that drives innovation in gaming consoles, personal computers, and data centers. But how does AMD earn its revenue? AMD generates revenue through its diverse range of high-performance computing products. Its processors and graphics units are utilized in various applications, including gaming systems, PCs, and the demanding environments of data centers. In the past 12 months, AMD reported an impressive revenue of $25.79 billion, with a net profit of $1.64 billion. Amounting to earnings per share of $1. These figures highlight the strength of AMD's varied product offerings and its capacity to cater to multiple markets. AMD currently has a market capitalization of $180.04 billion. However, the stock has declined by 36.68% over the past 52 weeks. And with a beta of 1.65, it's evident that AMD's share price has been more volatile than the overall market. On the analyst front, the average price target is $168.19, suggesting a potential increase of 51.39% from today's price, with a consensus rating of buy. Remember, we're merely sharing the data to help you understand the landscape, not offering advice. AMD's balance sheet is quite revealing. It holds $5.13 billion in cash, while its total debt is $2.32 billion. This leaves it with a net cash position of $2.81 billion, or about $1.73 per share. Furthermore, in the last year, AMD has paid approximately $381 million in taxes, which are part of its operating expenses. These figures suggest that AMD is well capitalized, enabling the company to invest in research and development and drive future innovation. So, what does the future hold for AMD? While we're not here to predict market movements or offer any advice, it's worth noting that AMD continues to invest in its core strengths, enhancing its technology in high-performance computing and data center. With robust R&D and a varied product portfolio, AMD is positioning itself to handle competitive pressures and tap into growth areas like AI and gaming. Let's move on to the second stock, Palantir Technologies, or PLTR, known for its explosive gain and role in AI-powered data analytics. Palantir generates revenue through its advanced analytics platform, catering to both government and commercial clients. In the last 12 months, it reported $2.87 billion in revenue, $462.19 million in profit, and an EPS of 0.19. Now, let's review some key market figures. Palantir has a market cap of $256.55 billion and an enterprise value of $253.31 billion. Over the past 52 weeks, its stock price has surged by plus 365.01%, and its beta of 2.81 indicates higher volatility. It currently has 2.28 billion shares outstanding, up 6.65% in 1 year. Analysts have set an average price target of $74.59, which is about 33.77% lower than the current price. The consensus rating is hold. On the balance sheet, Palantir has $5.23 billion in cash and $239.22 million in debt, providing a net cash position of $4.99 billion, or roughly $2.19 per share. Its current PE ratio is 592.74, while its forward PE is 200. Despite a 757% increase in share price over the past 3 years and fourth quarter revenue growing 36% to $827.5 million, Palantir's high valuation suggests that its stock might be overextended, especially as competitors like Microsoft offer similar platforms. In summary, while Palantir remains an innovative leader in AI data analytics, its current valuation appears misaligned with its modest growth prospects, hinting at a potential correction. Let's move on to the third stock, Tesla, or TSLA. Once recognized mainly as an electric car company, Tesla boldly rebrands itself as an AI innovator. With a market cap of $1.06 trillion and an enterprise value of $1.03 trillion, Tesla is a significant player on the global stage. Over the past 52 weeks, Tesla's share price has surged by 71.09%, although its beta of 2.34 indicates that the stock has been quite volatile compared to the broader market. Currently, there are 3.22 billion shares outstanding, a modest increase of 0.37% over the past year. Analysts have established an average price target of $310.67, which is 5.58% lower than the stock's current price. Consequently, the stock has received a consensus rating of hold. In the income statement, Tesla reported $97.69 billion in revenue, $7.13 billion in profit, and earnings per share of 2.04 over the last 12 months, resulting in a PE ratio of 161.29. On the balance sheet, Tesla holds $36.56 billion in cash and $13.62 billion in debt, leaving it with a healthy net cash position of $22.94 billion, or about $7.13 per share. Over the past year, Tesla has also paid $1.84 billion in taxes. Financially, Tesla's return on equity is 10.42%, while its return on invested capital stands at 5.97%. Now, here's where it gets interesting. Tesla is investing billions in Dojo, an AI supercomputer designed to support its autonomous driving strategy. If successful, Dojo could unlock high-margin software revenue. However, even CEO Elon Musk calls it a long shot. Despite these futuristic ambitions, Tesla primarily remains an automotive company, with 77% of its sales coming from vehicles. Furthermore, fourth quarter automotive revenue declined by 8% yearly to $19.8 billion. Adding to the caution, Tesla's forward PE of 127 is nearly 4 times the Nasdaq 100 average. This suggests that despite its innovative efforts, the market may be overvaluing Tesla, given its current growth rate and the uncertainty surrounding its AI transition. Let's move on to the fourth stock, Nvidia, or NVDA. Nvidia is the clear leader in AI chip-making and high-performance computing. With a market cap of $3.25 trillion and an enterprise value of $3.23 trillion, Nvidia is setting the pace in the tech industry. Over the past 52 weeks, Nvidia's stock has surged by 84.94%, with a beta of 1.62. Its volatility is notably higher than the market average. The company pays a modest annual dividend of 4 cents, yielding just 0.03%. Regarding shares and analyst outlook, Nvidia has 24.49 billion shares outstanding, a slight decline of 0.14% over the past year. Analysts are very bullish, with an average price target of $169.53, which is 27.66% higher than the current price. As a result, the company receives a consensus rating of strong buy. In the last 12 months, Nvidia generated $113.27 billion in revenue and $63.07 billion in profits, with earnings per share of $2.53 and a P/E ratio of 52.44. This is a testament to its scale and profitability in the booming AI market. Nvidia is very strong on the balance sheet, holding $38.49 billion in cash against $10.23 billion in debt. This results in a net cash position of $28.26 billion, or about $1.15 per share. Its financial efficiency is exceptional, with a return on equity of 127.21% and a return on invested capital of 73.74%. Additionally, it has paid $9.84 billion in taxes over the past year. Nvidia's shares have skyrocketed 421% over the past 3 years, driven by its GPUs fueling advanced AI algorithms. Thanks to the surging demand for AI, revenue jumped 94% to $35.1 billion in fiscal Q3 2025. However, early indications suggest that this high spending may not be sustainable. MIT's Daron Acemoglu has cautioned that AI may never solve complex problems to justify such costs, and low-cost open-source models like China's DeepSeek could present challenges. On the bright side, Nvidia's forward P/E ratio is around 30, which is attractive compared to the Nasdaq 100 average of 33. This indicates that some of the long-term challenges may already be reflected in the pricing, potentially limiting downside risk. Let's move on to the fifth stock, CrowdStrike Holdings, or CRWD, a cybersecurity leader that has been gaining traction due to its innovative cloud-native platform. CrowdStrike's core business focuses on advanced cybersecurity solutions that assist organizations in detecting and responding to threats in real time. Over the past 12 months, the company generated $3.74 billion in revenue, with profits of $126.71 million and earnings per share of $0.51. Its current P/E ratio is 852.99, indicating its high growth profile in a competitive market. CrowdStrike has a market cap of $106.32 billion and an enterprise value of $102.81 billion. Over the past 52 weeks, its stock has appreciated by 31.14%. With a beta of 1.16, its price volatility is slightly above the market average. There are 246.31 million shares outstanding, which have increased by 5.43% over the last year. Analysts have set an average price target of $371.93, about 13.83% lower than the current trading price, and the consensus rating is buy. On the balance sheet, CrowdStrike has $4.26 billion in cash and $791.95 million in debt, resulting in a robust net cash position of $3.47 billion, or approximately $14.08 per share. Last year, the company also paid $38,470,000 in taxes. Financially, its return on equity is 5.08%. An interesting factor to note is the growing role of AI in cybersecurity. AI chatbots are anticipated to automate many functions in security operations, reducing the time required to detect hacks and potentially providing a tailwind for CrowdStrike's future growth. If you enjoyed this video, please subscribe, hit the bell icon, and let us know in the comments which AI stock you are betting on.